Greetings and welcome to the U.S. Global Investors Call. It is now my pleasure to introduce your host, Mr. Frank Holmes, CEO and CIO of U.S. Global Investors. Thank you. You may begin.
Well, thank you. Thank you very much, and good morning, everyone. I'm also the controlling shareholder and largest shareholder of U.S. Global. So I'm truly committed to this company, and I moved down to Texas from Canada about 30 years ago. And so now I'm a full-fledged Tex-Can. Y'all come back, A. Now with that, I'm going to try to give you the history of U.S. Global and weave it in from the past, the present, and then where we think the future will be. So I'm going to jump to, this is a picture of our building. We own our own building. We're at the crossroads of the biggest loop around San Antonio, and Interstate Highway 10, which starts in Jacksonville, Florida, goes through New Orleans, Houston, San Antonio, and goes all the way to L.A. So we're at a great location within the city of San Antonio, and we own our own building, and we've done that for almost over 25 years. It's been very cost-effective for us. The next visual is sort of the company's history, and the company was created as a fund management company because it was originally an investment club with the military, and the founder, Colonel Clark Galesworth, who was an Air Force pilot who fought in the Pacific, started this company, and he started with the investment club, was originally investing in gold stocks, in particular South African gold stocks at the time, and it grew so successfully that he was knocked on his door that he had to become a mutual fund. Back in that time, it was really simple and easy, and it was the regulatory and compliance stuff was so de minimis. The barriers to entry were easy. The biggest part, he had a huge following. And then the company, to raise capital and grow, went public in 1984. And in 1987, 88, that period, they stumbled. The company just basically made some really bad choices, in particular with a person. And so I had the opportunity of moving from Canada and coming down and purchasing a controlling interest and becoming the CEO. And then later in the year 2000, I became the CIO. But I think what's important in that genesis of history is that during that period of going public, Clark Galesworth and his vision was to become the first no-low gold fund. And he grew tremendously with that. And in fact, his success was as a United Services Advisors. USAA started a gold fund because they were getting so many calls from the military asking for the price of their gold fund, and not realizing it was Clark Galesworth's company. So they said, well, there's so much interest in gold by military officers, they went and launched their own gold fund. So that's an interesting history of USAA getting into the gold fund business. Now they've sold all of that. If we go to the present world, to Victory. So they're no longer in the mutual fund business, but we've survived the volatility of the industry. And I think in this process of coming down in 1989 was to my experience in Canada. I started as a research analyst. It was a very basic sort of quant approach to looking at dividend stocks versus 5-year government bond yields. And from there, I went in to build a trading desk that catered to a lot of the gold mutual funds around the world. And then I went to investment banking, and I was very fortunate my first transaction to work on, not realizing it at the time, but it was Franco-Nevada. And Franco-Nevada is now the largest gold royalty company in the world, the highest revenue per employee, listed on the New York Stock Exchange. And I'm really thrilled to see that it's in the top 10 of IBD's 50 for growth stocks in this gold space. So I have research analysts, I have trading, and I have investment banking experience. And I said, you know what? I want to get out of Canada. At the time, taxes were so high. I wanted to run my own show, and I moved to Texas. And it's been an incredible journey. I've been very blessed, both ups and downs, and learning a tremendous amount. But in that process, we renamed in '96 U.S. Global to U.S. Global Investors, and then we started to launch some funds that were basically in the 90s catering to the big boom in China We launched the China region opportunity because when my experience of going over there in the early 90s after buying control, I saw that it was still so primitive, the airports in Shanghai and Beijing, but there was always these big malls where you could buy 24-karat gold jewelry. And as the rising GDP per capita was taking place, then we saw more and more gold being consumed in China. So it fitted into our thesis as gold as a unique asset class. And we also saw that they were copying America. They had created 7 tax-free zones along the coast. They had basically copying a common law that from the British had for their stock exchange and the U.S. So the Chinese were doing everything to fast-track their economy, and 30 years later, it's a phenomenon what they've been able to do. But we were early in seeing that transition. And then we launched the first Eastern European fund because we saw the significance of the EU being formed. And as that formed, that particular fund went from $4 million to $12 million, back to $4 million, then went to $1 billion. So we caught that trend that was taking place, and that's what we've been trying to, be early in that area and space. But what we were always known for is gold, and we became that sort of go-to stock that traded as an investment advisor, and throughout the past 20 years, I would say almost 70% of the time we have correlated with the price of gold action. And it's morphed. It's morphed as ETFs have grown and mutual funds have not been so significant. And one of the things, as I noticed with my global travels, was the airlines industry back in 2012 and 13, 14. All of a sudden, the price tickets were soaring, and my options to fly everywhere was contracting. I wanted to know why, and I knew it was being pushed to create an ETF, so we launched the first global airline ETF, JETS. There was no other product around for it, and that was the first start. And it's interesting, that journey took almost 5 years to the date before it exploded, and I'll walk you through that in assets and growth. And it's been so important and significant for our future. And in this year, that transition, while the market unraveled in March, April, and May, our JETS ETF exploded in assets. And then we also launched 3 years ago, almost 3 years ago, last month, GoAU, which is a play on gold. And both these particular products were quant approaches to play. So right now, it's interesting, as a huge asset play and the only play in the airlines industry, the airlines are still unable to get profitable, but we are profitable. And so we've become a play with whatever the airlines are doing short term, and I'll walk and explain that more in the presentation. So the next slide is sort of industry pioneers. So the company was founded in 1974, became the first Nouveau Gold Fund, the China region, and the same thing with Eastern Europe. And with that, these are visuals to show the thought leadership of traveling around the world. And I started writing a blog, and then my investment team got behind it, and we write a SWOT analysis every week about what we're seeing in the capital markets and changes, and try and be unique and different. And there was with my YPO peers in San Francisco in '99 in San Francisco with Jeff Bezos as Amazon was just being launched. And so I've had this incredible blessed experience of being able to meet these people. And what I used to run a lot of marathons. And so in my global travels, I try to fit it in. I ran London, I ran Rome, I ran Paris. I had many of my employees at one time run New York. I run New York several times. But running has always been a way for me to collect my thoughts and focus my energy. So that's, as you can see, is the global trotting gives investors a unique experience. And that's where we have tens of thousands of people listening to our thoughts every week. And publicity, how we've grown predominantly in building the brand is viral publicity gained through media interviews. Before the build-out of social platforms like the Twitters and YouTubes, etc., we were very big and significant in radio and newsletter writers. And that's gone through a transition that now we do a phenomenal amount of TV in addition to building out on the social networks. But it's important to be a thought leader, and I'm such a big believer in it. And I'm very thrilled about the marketing team and the investment team that collectively we've been recipients of 88 awards, first of class for educational in the investment world. There's an association in Chicago that looks at all the no-load mutual funds, and they compete each year for awards for educating and informing shareholders. And my team, for the past 20 years, have basically received 88 of these awards. So it's a lucky number in Asia, double eight, very prosperous and good fortune. So we'll continue to compete and to continue to innovate and try to explain to investors in a balanced way what's important about looking at the world of gold. In particular, now we look at other asset classes. On the next visual, slide 6, as you can see, domestic equity and fixed income is about 31% of our assets, and almost 70% are emerging markets and natural resources. The real hardcore growth is coming from the natural resources and gold, in particular now, and with the growth of GOAU ETF through 100 million, that's also very important. The next visual, and I think it's important for you to recognize, is that we also have a very strong retail following. And that's important because as more money goes on platforms like the Schwabs of the world, it's very transition money. It floats in and out of their money market fund and our gold fund. And historically, we've always had it where they stayed in our money fund. And what they now predominantly goes to our short-term, very short-term government bond fund, or NEREX, our short-term tax-free fund, which is a relatively stable NAV, probably the most stable NAV of all tax-free funds is near-term. And we try to run this as a concept of a very short, very low volatility, like a money fund. Why is that? Because there's zero interest rates. There's no money to be made. So we've figured out a way to lower the stock price, therefore you have less volatility, and shorten the yield curve. So the yield is higher than what you're going to earn in a money fund. And so we do have funds that flow between our asset classes with the retail that's on these platforms and back and forth our money fund. Next visual is our approach to building performance and managing costs continuously. So I always like to say that we have a very reflexive system and streamlined for sustainability and growth. In everything we look at, everything is performance inspired and performance driven. A lot of the compensation at U.S. Global is based on performance in every department, and that keeps everyone much more flexible in their thought process. Next visual. So we have 9 actively mutual funds: Global Resource Fund, Gold and Precious Metals Fund, World Precious Minerals Fund, China Region, Emerging Europe Fund, All American Equity, which is now going to be is going through a process of change, and the Global Luxury Goods Fund, in near-term tax-free fund, and U.S. Government Securities Ultra Short Fund. And so these are the mutual funds, and the real sad part about mutual funds is the burden of regulatory costs just continue to grow, make it very expensive to get in the business, get out of the business, to shut down a fund. So ETFs are also more tax efficient. There's many other benefits with them, and they've grown substantially. And I wish looking back, I had made that transition to ETFs earlier in the sort of the journey of U.S. Global Investors as an investment advisory firm. But nevertheless, we have made it, and we've had a winning ETF. I think it's something like 7 businesses, so 6 have been the fund business, which we've taken to $1 billion in assets. But they go through their history. It's amazing to witness. Gold goes through these big cycles, and then not only does gold stocks go through a cycle, this sort of change between mutual funds and ETFs. And we're happy to say that Global Luxury Goods Fund is the only luxury goods ETF that's out there. And one of its biggest holdings is Tesla, which is deemed to be a luxury goods car, and it's also a technology. It's an innovator, and its market cap now is surprisingly surpassed all car companies in the world's market caps. It's getting those winning stocks early is just the same thing as getting the winning ETF today. But launching these ETFs has been an incredible experience. I wish to briefly share with you. It shocked me to see that the gatekeepers are totally different than when you have mutual funds, the distribution, and between the time period of building out a network to launch JETS, and thank you to Deutsche Bank at the time, but now Deutsche Bank is basically no longer relevant in the gold in the ETF space. So during this period of 2 years, all the gatekeepers at all the investment banking firms and et cetera are all gone. They changed. And this element of change is not just in mutual funds to ETFs, but just who the information traders are and what they're doing. And so you can see there's GoAU a couple years later, and I'm thrilled to see that it's gone through the $100 million and hopefully on its way here to $1 billion. I think it's a superior product. Both these products, both JETS and GoAU, are a quant approach, quantamental approach you would call it, and they're very smaller number of holdings relative to the basket of stocks that you pick from, and they're very caught up on growth momentum or who's the cheapest on a relative value basis. And then the portfolio structures are very unique, and they call it Smart Beta 2.0. So it's not just the factors for picking these stocks, it is the overall portfolio structure and how it recalibrates every quarter. So you do have to have an active eye. It's not a black box you walk away from. So we're thrilled that we did thousands and thousands of hours of backtesting before we launched these products, and they've done what the backtesting suggested. The next visual is JETS. JETS has been in a unique phenomena that it had going in the end of February and going to March, and then the assets took off for 70 straight days, and over $1 billion came into it. Sort of unprecedented growth. And it's been written up many times by various writers, in particular Eric Buchanan with Bloomberg, who covers their ETFs, that's really talked about it. And I think when we look at JETS, which is the big thing, is to understand millennials. Millennials are coming into this marketplace in an unprecedented way, which is very positive to like the 90s. I'm going to go back a slide, sorry, there, just to really highlight about JETS. What we saw during this period that JETS was, the airline industry was troughing between March and April and May, is Buffett sold all of his airline stocks, and close to 25,000 bought them at the bottom, and then JETS surged. It surged something like 50-some-odd%, and then it corrected while the airlines industry refinanced their balance sheets and improved them. And hopefully get here for the second leg for this move. But what's interesting is that the millennials have come in and been spending more money in speculation and investing than stock buybacks. And most of their money and funds that they received during the meltdown of the lockdown, you would call it, they put them into the stock market. So we have a whole new expansion of the ecosystem for capital markets, which is very, very important. You need to have minerals like you need whales and sharks and tunas and every other type of fish in the ocean. A healthy capital markets needs to have everyone investing for different reasons. Now I'll jump back to slide number grow. Still highly correlated with gold. So our gold assets are growing, especially our GoAU as a proxy. And our World Precious Minerals Fund, which is a mutual fund, it's the only one that really invests in junior exploration companies. And it's historically has lagged during this troughing period, and then it takes off. But what I want to share with investors, we've gone through what's called the golden cross. 18 months ago, gold went above, the 50-day went above the 200-day moving average. And this is very important for investors to recognize. That transition of going is usually the beginning of a secular bull market. Go to our website, see what we've written. Managing Expectations is one of my favorite at usfunds.com to learn more about investing and volatility. But this golden cross is basically started seeing billion-dollar hedge fund managers recommending gold as an asset class a year ago, and now everyone's jumping into gold as an asset class. Short-term, I think, is due for a correction, but that'll just be a normal, healthy correction in a secular bull market for gold and gold stocks. So I mean, really bullish on that. But one of the things I noticed in the next visual is Hive blockchain. Hive is so important for me because I tried to launch an ETF after launching GoAU that was in blockchain crypto space, but I quickly saw legal bills of over $1,000 an hour and found out why the SEC and the Interior Securities Commission was a pushback. It has to do with anti-money laundering laws. There's just so many banditos in this entrepreneurial. It's like America, wild go west young man back in the 1800s, and before there's any deputies or sheriffs in town. So this crypto space has now gone through a big correction, but I think it's important for investors to recognize we couldn't launch an ETF. We saw that in Bitcoin or Ethereum. So we turned around with this knowledge and co-invested and co-launched with other friends of mine in Vancouver, Hive blockchain technology. And that became the first real global mining company that's mining these Bitcoins and Ethereum. We start off with Ethereum, and it's been an incredible volatile ride from 30 cents up to $6, back to 10 cents now, back up to, I think, 50 cents. And it correlates, it's just like Grow correlates with the airlines, Jets ETF and gold. Hive blockchain correlates exactly with this, to me, with Bitcoin, Ethereum prices, which right now are surging. Bitcoin's over 11,000, Ethereum's pushing close to 400. And what's happened is that people do not want to play and buy a Bitcoin or Ethereum on when these crypto blockchain exchanges are using it as a proxy. And that's been thrilling. It trades some days last week, 20 million shares in a day. So Hive blockchain has become our way of playing this sort of blockchain space that's growing, and we are the largest market cap. We're the most liquid. We have close to 0.75 of a share behind every Grow share, and it gives us our position just like an ETF to play in that new technology that's growing. So you can see that at times we've also highly correlated to cryptocurrencies, which now are also correlating with gold. Next visual. First movers in financial blogging. I highly recommend you log on and subscribe to Frank Talk, Investor Alert, for our comments and our thoughts to help you understand. And Grow will continue to brand itself as a unique investment advisor, as a public company. And it's really simple. If you have $1 billion in assets and your average management fee is 80 basis points, you can do $8 million in revenue. How much you're going to make? So we move up and down with those assets. As gold is rising, Jets is rising, and Hive is rising, then we benefit from that. And so that's all these different channels of branding and marketing is how we tell our story. And what we've noticed is how the stock has appreciated substantially this year has a lot to do with the success of Jets, spectacular success of Jets, and now GoAUs, and we're seeing Hive blockchain on a surge also. In 2016, we're winners of the Mining Journal's Best Americas-Based Fund Asset Manager. I've received many awards as being a thought leader in the gold space for the industry itself, not just for our retail investors and institutional investors, but also for the mining industry. As what I've seen is that the quants are driving a lot of the flow. 70% of all trading daily is based on quants, and quants use sentiment analysis, and also they use fundamental momentum analysis of last quarter and revenue over 4 quarters. I write about this. Please visit. You'll get a better idea. Our website at usfunds.com. As I try to wrap this up, as I mentioned earlier, we've received many awards for our contribution to education. And that is a wrap. And if I have any questions, I look forward to hopefully I can answer them. Hello?
Yes. Do you see any questions on your platform, Frank?
It's not showing up. I'm not.
So you're not seeing any web questions?
No.
Okay. Okay. Would you like to?
Are you seeing the questions there? 1 second.
Sure. Absolutely.
Okay, 1 second.
Sure.
What are your thoughts on AI and mineral exploration? I think that AI is very, very significant in investing in the mining industry. It de-risks exploration. That's a real important part of what it does for investors. And I see lots of competition coming into this industry, which is good. So, yes, AI is going to be very, very important. And then what is your outlook for the EV market? What is the EV market? Emerging market, I understand. Emerging market, I think, is undervalued in relative places, but I don't know if someone made an error there. Next is, can you discuss plans for significant cash on the balance sheet? Well, right now, we're rebuilding our cash position, which is important for making investments. But we will continue to look at launching new ETFs as well as looking at investments where we want to try to be the first mover advantage like we were with Hive Blockchain. I think what's important is that the crypto space has bottomed. It bottomed, it was interesting enough, when JP Morgan, who always knocked Bitcoin, came up with their own cryptocurrency about 15 months ago. That was the bottom for Bitcoin prices. Interesting enough, a few months later, Facebook came out with Libra, and all of a sudden they allowed advertising on about Bitcoin on their website. It's lots of sort of hypocrisy in the capital markets this way, where they trash talk an industry while they're busy trying to launch their own blockchain cryptocurrency. But the cryptocurrency space is not going to go away. I'm so happy that the regulators have gone in to clean up a lot of these banditos, which I personally experienced with lack of corporate governance and lots of conflicts of interest. But I remain very bullish on the industry. And then what are some of the value catalysts you see coming to the mining industry? One of the biggest things is the quant approach, is that the industry for the gold stocks themselves for 10 years never had free cash flow, but the S&P did. And generalists are much bigger than gold fund buyers. And when the general sees free cash flow, they're agnostic to the industry. They're not gold bugs. And so in March of this year, we witnessed where the S&P, due to coronavirus, lost its free cash flow yield as a whole, but not the gold stocks. As a sort of basket of 500 names versus the 100 gold stocks we track, all of a sudden they turned positive, and the best performing stock was Newmont. We take a look at the success of gold stocks this year in the S&P 500. But I think that we're going to see more focus on revenue growth per share, cash flow per share growth, paying dividends, and many of the new CEOs in the gold mining industry are more focused on that. So I remain very bullish on the gold mining industry, and I've written where I think that the last cycle gold went from 700 in 2008 up to 1900. This cycle here, based on the Fed balance sheet expansion, forecasts the potential for $4,000 in the next 3 years. Well, these gold stocks can quadruple or go up tenfold as long as they maintain the metrics of revenue and cash flow per share. So I remain bullish on that, and our GoAU ETF will capture that. Now, when it comes to ETFs, the question is, what are their fees and basis points? They're about 60 basis points is how we run those, because they're not just a simple index. They have to be managed. You have to look at them every quarter. These 30 to 40% are mean reverting, but the other ones are stock picking, and we have outside eyes running the models, and then we ourselves find that scrubbing data is a very important part of the AI world, and the same thing of looking at indexes and picking these stocks. Electric vehicles is a question. There's no doubt electric vehicles, the EV market. That was the question now. Okay, that's what I meant. Sorry, I apologize. Using a VC or EM when it comes to mutual funds. But the electric vehicles, it's going to continue to grow. But remember, all these industries, technology to grow, need mining. And it's so important that mining is a critical element. So lithium is going to be important, rare earths, and one of my favorite gold stocks, Hochschild, which is trades over the counter in the U.S., listed in the London Stock Exchange, has the largest rare earth in the Western Hemisphere deposit. They're developing, and they're a substantial and major silver and gold producer in Peru. So you get gold and silver and rare earths. So the whole idea of technology in EV, we're going to need mining. So global resources is going to be an important element in its growth and success. And I think that that's a wrap.
Okay, this concludes today's webcast. You may disconnect at this time, and we thank you for your participation.